I'll throw it on the YouTube first to make sure we're Gucci.
Yeah, so we have a link, right?
Yep. You got it. You got it. Well, we got to buy some more synopsis.
Dude, ASML has had a move, huh?
It has, and I kick my own ass every day that I see what it's done, and I wasn't taking a part in it, even though in 2022 I was like, I've got to buy this. I need to buy this. Same thing with Broadcom in 2020, 2021. I was like, I got to buy this. I got to buy this, and I didn't buy it. Same thing with Broad. I hear myself. There we are.
So when I share it on my on
There we
stock
are.
twits, should I say
So when I
streaming
share it
on
on my, you can share either your channel, my channel.
should I say
We've got a
streaming
lot of
or
crosstalk. Hang on. Hang on.
your channel?
There we go. All right. Shut myself up. Can you guys hear me?
Yeah.
All right. Everything looks good. Now I'm going to flip on. So, Nick, what I was saying was you can do whatever you want to do. You can share the link that I'm sending out to my YouTube. You can share your tube. You can send it to your X, whatever you want to do, because I'm lighting them all up right now. GP, you should be live momentarily. Nick, you should be live momentarily and on X and YouTube. So you guys should be in all of those places. So however you want to do it, it doesn't matter to me. The YouTube, it might make sense if we funnel everybody
That's
to
why
one YouTube stream. That way we can chat with them, right? But
that's why I was asking. I'm
so
just gonna
I'll tweet out mine then. GP already did. Never mind. Let's do this on a Tuesday. And I will tweet or retweet any of you. GP is live. That's the first one I see. Sorry, Nick.
no, all good.
All right. All the links out. We good?
Yep.
At Jeff DI at GPiza7. Post done. Hi, fellas. It's the Tuesday show. I kind of like just calling it the Tuesday show. Fuck it, right?
Yeah, totally.
It's our own thing. It's the Tuesday show. Um, Anyway, where are we right now in the market? It looks like it's 3D printing time. GP was saying. Let me share the screen. Share the screen. Share the screen. Can you see the screen?
I can.
Wonderful. Wonderful. SSYS Stratasys.
So
GP.
we
This is where
experienced
you want
this.
to start, motherfucker. Let's go.
Let's go. This is 2021. Hello, welcome back to a throwback. Um, we are in the 3D printer cycle of taking shit up. It's been doing this for 30 years. Yes, go ahead, Ben.
Yeah, you remember when Common King Kyle would post on Stock Twits like, "I want your best ticker for the coming year," and I
Yes.
remember at the end of 2020, like everybody and their brother was SSYS. Anyway, go ahead.
Yes, yes. And it went nuts.
It
And then
did.
it also died. So we are officially in that part of the cycle, fellas. Do with it what you want. It can last, but if you're looking at the weekly here, we are. If you draw a trend line from 2022, that it doesn't matter. Draw a trend line. It makes no difference.
I don't draw a
We
fucking trend line on that
Yeah,
shit.
yeah. Where look at the volume that's coming in. This is an inverse head and shoulders here, basing at that $10 mark. There's, yep. we are in the 3D printer cycle. SSYS was not the leader last time. I believe it was DDD, if you want to pull that
Yes.
one up.
Yes. The triple D's.
Yeah, so same, not as much volume. So SSYS is the one I'm looking at more. It's a trade. It is nothing else. Understand that these cycles happen in 3D printers all the time. It's every 3 to 4 years. They pop, they drop, they pop, they drop. PRLB is the other one.
Yeah.
ERLB. There you go.
Right? This has got a better base. This could break out more. But ultimately, what you should start hearing in the chatter is, oh, the physical AI is going to be really good for 3D printing. They're going to get bought out. You'll get the cycles. What's the other one? Oh, they're cheap. This company has been around for 30 years, SSYS specifically, and they cannot figure out actually how to be profitable of any magnitude, and so the cycles exist. So that's where I think we are in this market right now. Meanwhile, all the nuclear stuff continues to pop. Oklo with zero revenue, zero forecast of revenue is sitting at $150. Elon buys $1 billion of Tesla. It can barely have a 5% move. So just know where your momentum is and trade it, right? That's kind of what this market is right now. There, and on top of all the 3D printing stuff, look at what's up today. Beyond Meat bankrupt, Laser bankrupt, Blink Charging bankrupt, T-Doc. We don't even need to talk about
Well,
T-Doc.
yesterday was the first day of fall, asshole. We said it was going to be shitco fall. I mean, I specifically remember that coming out of your mouth.
It still should
What,
go fall. Look at that.
a month
RTY is
ago, four
breaking
weeks
out.
ago?
Yeah.
No, small caps are still breaking out, right? Like small caps are still. So I'm not talking about those. The new cycle leaders of the small caps are crushing it, right? Like look at the ones that are setting up HIMS, Lemonade, Rocket Labs, ASTS,
But did we
Duolingo.
not
I
define
forgot about Lemonade.
shitcos as not just small caps, right? Which you're going through right now, but also legitimate shit companies?
Yes, yes, yes. But I
Okay,
I I argued to say we shouldn't call it Citco Summer because it's doing a disservice to the companies who've actually
who are
crushed it.
good? Yes, yes. You did you were a champion for that point of view.
All right, we talked about it. Like all this crap that's popping today. This is the stuff that got weeded out in 2021. Half of them are bankrupt. Half of them are on the verge of being bankrupt, and they keep getting like Lucid should be bankrupt, but the only reason it's not is because it's got that Saudi money, right? So, um,
I don't know anything about it.
Yeah, I
yeah,
don't know much about Lucid.
they got like an $8 billion
I try not to
investment, and it's
invest
worth
in
like.
things I know. You know me well enough to know that by now.
And you know me well enough that I look at thousands of
Every
stocks every
fucking
day.
thing. Yes, I do. I do.
Yeah.
I do.
So,
I do. I do. I'm not saying that I'm not making a judgment on that's good, bad, or whatever. Nick, I've heard enough of GP right now. I need you to say something that's non 3D printerish.
Yeah, I mean the two trades I threw on today were MP and USAR.
I love
Um,
NVDA. I've loved it for a
Both
long
kind of through those the early pivots, but I don't know what to really say about them other than the I thought the charts looked good.
So here's my challenge, right? I'm always early. I'm habitually early on everything, whether it's showing up to a soccer game or buying options or stock early. I'm early. And MP specifically, I bought when it was a SPAC, Nick.
Oh
And
shit.
and you know where I sold it? Somewhere up here in the 30s and 40s, which
Yeah.
is great. But what I have a problem doing is rechecking on those winners after I've let them go. Because once I sell them, they're kind of like dead to me. You know, it's like I made stupid amount of money off this. I don't need to ever check this name again. And I think it was around this time last year, so that would have been down in the 20s again. I pulled it up for some folks, and I was like, I really think MP is going to be a big deal. And now look at it. It's at 75 fucking dollars. And here I sat on my hands after having owned it when it was a SPAC till now. How do you combat that? Because I don't have an answer for you. I suck at it.
Um, I mean, I have my master list on, on my desktop platform where, I've got like 1,500, 1,600 names on it. Um, Usually a name like if it is going to pop up on my radar, it's going to pop up on a day where I'm toggling back and forth between percent gainers, percent losers,
Yeah.
dollar losers, because I just kind of constantly toggle back and forth. And then I have like a separate list of like stuff that I wouldn't call it my focus list, but it's just the list that I legit have alerts set on it. So like if I'm um getting in and out of positions or moving money around, like if I exit something for whatever reason, whether I get stopped out, trail stopped, or just stopped out by time, I'll try and at least set an alert, like a low alert. So like let's say I did get stopped out, let's say I got trail stopped out. I'd set like a low alert to see if I could, if it pops up on a retest of like the 200 day, the 50 day. Um, with TradeStation, I have the ability to set alerts if like a moving average is ticked. And then same, like I'll have to input the ticker multiple times if I want to set different high and low prices. So
Yep.
like if I don't know if that makes sense, but like I'll always set a high and a low alert. So like, because I don't really care, I'd almost prefer to buy on strength versus weakness. So I'm always gonna look for either a high volume candle to set alerts against like the high, a range or a base, like the low getting reclaimed, um, or just like an all-time high, 52-week high, whatever. I used to have a thing. So a long time ago, I read one of the books by Michael Koval, and I was, reading about the turtles and those. So the trend traders, they don't pay too much attention to like a 52-week high. They're looking at like a 20-day high and a 55-day high. And at one point, I had those alerts kind of set, but it just got to be way too fucking much. So I
Yeah.
shut those off. But anyways, long
So don't
answer.
throw them away. Just keep them on a watch list and then
Yeah,
sort through them on occasion. And when it pops, it pops. And when it doesn't, don't worry about it.
if the alert doesn't go off, there's no reason to like pay attention to it.
Another
And on
name that
top
I
of it,
had was Rocket Lab. I had Rocket Lab from a damn SPAC too. And what did I
yeah,
do? Right? I had it low and I sold it. I don't even remember where I sold the damn thing. But I mean it was a nice winner for me. It went through hell, so it was somewhere probably around this pop, right?
yeah.
Like it was a $10 stock, and I think I want to say it was around $18 or $17. I can go back through and look at my book and tell you, but anyway, GP, how do you manage that? Or you just never sell out of something that you have a long-term thesis on?
Bingo. But I also, right, like, so there are moments where, like, so I obviously we've talked about Tesla many times over the years. Early investor here, like when people didn't believe in it, and obviously the 2020 move was like a nearly 30x move, right? Or 25x move for me. So yeah, I took stuff off that. I'm like, this makes no sense for me not like I still believe in the company, but it's got to consolidate, right? It's got to come down. Did I ever think it was going to come down 78%? No.
Right.
From the all-time highs, but I knew that we were at that point where their growth does not match their pricing, right? And the market cap structure. Um, and I bought it on the other end where they were making, I think, $23 billion a year and their market cap was 29, right? Like it was a one-to-one deal. I was like, this is a no-brainer, right? These guys are growing at insane clips. This, and so when it got to that level where it was trading at some ridiculous level, my levels, not some random PE and stuff like that.
Yep.
I started trimming in the 300s. Yeah, I went to 400, but I was like, I don't really care if it goes much higher here. I'm going to buy back when it's lower. And so that worked out pretty well. I was able to redeploy that capital it back into Tesla, obviously bringing my average up, but back in like I think I started again around 270. Like I bought a couple of shares at 270 and then just as a placeholder to watch it and um then had trenches just like our AMD trade, which was I'm gonna buy here, I'm gonna buy here. If it gets back to
Yep.
here, which was like 120, that was my last buy. I didn't know it was gonna do another 20% down to 101. Yes, agreed. So my last buy was 120. But what I knew at 120 was it's a pretty good spot. Whether it goes another 10, 20% lower, it didn't matter to me at that point.
Right.
Like we were in a really good spot. Did I want to time the bottom? Yeah, obviously. Who doesn't, right? Well, who doesn't want to nail the, but I didn't care. So on things that move insanely crazy, I do trim out stuff I don't believe in. Trim and trail process,
Yep.
Riyadh, right? Like Rocket Labs, I don't believe in, but I'm a shareholder at 26, right? So when it started to get to 47 to 51, I was trimming down
Yep.
and let it consolidate. And so when I got back to like, I think 41, 42, I re-added the shares that I sold because I think it's up for the next leg here, right? It's good consolidation. Same thing with HIMS. I did not sell, unfortunately, HIMS, and that's been kind of I think the thesis on HIMS for me is much greater. So I didn't want to time that one as much. I think HIMS has a much higher move. I have more conviction in that name. So um and the higher the volatility in these, like to me, this is something that over the last decade or so plus of doing this is founder-led disrupting companies experience volatility like no one else, right? Like we can talk about HIMS, we can talk about Tesla, but one of the biggest FinTwit darlings right now is Robinhood. And
Yeah.
Robinhood could not find a buyer sub 10, right? Like no one wanted to talk about it. No one wanted, and dude, that was a 90% move down in Robinhood, right? Like if you're talking about volatility, this is volatility,
I'd
right?
say
And
sub 12.
We
yeah,
were hammering the table on that back in 2023.
We were.
we were at
All
under 10
throughout
was
that.
a no-brainer.
Yeah.
Right? You like founder-led disruptors, they tend like unless it's Trevor Milton from Nikola, they tend to figure it out, right? There are fraudulent ones. What's her name from the blood drawing company? I can't remember her name, but there are fraudulent ones, so they gotta pass the sniff test.
Yep.
But Robinhood was never fraudulent. They got caught in the meme revolution a bit,
And got some
right?
bad press.
Yeah, bad press, but founder-led market disruptor. The reason everyone trades as easily and as cheaply as they do now is because of Robinhood, not Webull, not Schwab, not TD Ameritrade, not Interactive Brokers. It is Robinhood, right? Like it's anyway. So I'll get off my little soapbox here, but founder-led disruptors tend to figure it out, but make sure they pass your sniff test.
So I was just telling Randy in the chat, like I've pretty much completed a full portfolio rebalance slash update. And it's not that I don't love some of the names I'm in, but at the same time, I've coin, for instance, right? GP, you and I were all over that in the 50s, right? And
Yep.
I was playing options back and forth on it, but at the same time, like this is a position that from my cost basis, I can literally hold most likely forever, right? So how do I put some torque into it, or how do I put some leverage into it? And obviously with the crypto cycle, I've been talking for months now about, you know, really amping up those and leveraging up those plays. But that got me thinking over the last few weeks is like, why don't I just use, 20 to 25% of my portfolio as these leverage or torques or my long enhancers, right? Like just like I'm doing right now with crypto. And sure, if I'm wrong, like I'm going to lose more that way, but it gives me um, more, using a fishing term, it gives me more lines in the pond, right? So I've really thought about it a lot, and I've come up with my six core positions that I want to stay in for as long as I possibly can, and everything else is sort of ancillary to help build those positions or are adjacent to those positions. So that's how I'm looking to run the portfolio. And I know when we did our New Year's resolutions, one of my things was I want to exceed my previous year's, gains by doing less. And I'm not doing more than I've done, but the performance is there. What I'm doing is working, and that could be, just the bias that I'm getting from a friendly market right now. But at the same time, it's like I've held AMD forever. I just restarted a position in NVDA. Do we see in the next 13 to 15 years where semiconductors aren't part of our future? I don't think so. Um,
No, now they're also getting the iPhone cycle,
so So
right?
I'm
Like you're
I'm
you're
I'm
getting
I'm
this.
trying to go down that route, and
Yeah.
I've got most of my positions in place. I'm still missing one, but yeah, I mean, I feel good about it. I've sort of tested it myself, and that's where I'm at. And whether I've got to cut loose some of the things that I've held on to that I still believe in, or just trim them down, like it's about maximizing my long-term gain, right, and compounding those winners over time. Nick, am I looking at this right? Am I crazy?
No, I mean, I don't think so.
No,
I
it's
think you
it.
pretty much hit uh, every major like sector of like the metaverse moving forward, I think. Like there's nothing, it feels to me as if like we know exactly what's coming. And I don't know if that's just me in my head, but yeah, I don't know if that's just me in my head, but it's like I feel like I know exactly what's coming and where we're going. It's kind of just kind of positioning yourself in the right names if you're looking to be in, if you're looking
Well,
to
let's not talk
concentrate in.
around it. Where are we going, Nick? Where do you think we're going?
I mean, I think that there's a you know there's a lot of those that have kind of the recency bias. So they're in their mind they're thinking COVID, and we've compared this market to kind of the COVID years. Well, however, I think what's coming is more closely tied to like 99 2000, where we're ramping up into like a massive kind of blow up move, whether that lasts a couple years, 2 to 3 years, or 5 to 10. I couldn't really say,
So
but
I'm gonna pause you. Let me
I
frame it.
yeah.
You're saying that the people who are saying we're inside a bubble, you're not disagreeing. You're just saying that bubble has a long way to go before we're at
Yeah,
that stage. Okay.
totally.
Sorry. Go
It
ahead.
like I think that um once, Elon and whoever else is out there has all the freaking satellites in place and you can have access to Wi-Fi and service pretty much anywhere on the planet, I think that's going to be the final nail in the coffin for like fiat cash. And then you factor in crypto, not even just like crypto, but like e-currency. Like it doesn't really matter what you like, which one you pick or how you call whatever you call it. So like that's gonna sh ha that's gonna we're just moving into this entirely fucking metaverse. It's like the only way to really like everything's gonna be digital. Everything's gonna be like online. So I still think that like Facebook or Meta, I think that your Facebook profile or Meta is gonna be your one place that's gonna be your online profile. I think your like social security number, your health records, all your shit is going to be tied to your Facebook profile. You're gonna you're gonna vote via your Facebook profile. Everything is going to be done online because as it stands right now,
You're not really saying it's your Facebook profile. It's something digital, or are you really saying it's your
yes,
Facebook profile?
no, I think it's gonna. I mean, I think that it's just gonna be like Meta. I think they already have it all built out. They're already like they're already too big to fail, basically.
Yep. Yep.
Like they're the everyone's already on there. Um, shoot, where was I going with that? Oh, if you look at the just society, nobody trusts each other. Everything is so extreme. Everyone is so like, not, I mean, maybe not everyone, but what the internet and like social media and the mainstream media and Twitter and all the shit, that's what they want you to think.
Yeah, it's a
They want you to
hateful
think that
world.
everyone, yeah. And so it's like, we're losing faith. We're losing so much faith in both, uh, the collective as well as like the system that the only way that we come out of this is in some like radical ass transparency. And so that's like everything is going to be online, documented, digitalized. So I think like, you're talking about like, Palo Alto. It's like, dude, of course, like cybersecurity is going to be and already is huge. Like
Yeah.
it's got to be.
Yeah.
If everything that is you is online, like you want that shit secure. So I don't know. Then you throw in the like, we talk about like AI and robots and the drones and all the things. It's like we're accelerating at a pace that we've never seen before. And like, we were talking about 3D printing, for instance.
Yep.
Like I personally, I think that the use of AI and robotics is going to make all of these things that we think or kind of laugh about in fantasy. I think it's going to be like they're going to become a reality more often than not, I think, at this point. Like just
Wouldn't disagree
yeah.
with that statement. I just don't think it's going to be any of these companies. That's
I'm
the
not
difference.
yeah, for sure, for sure. I'm
Yeah.
not like yeah, I'm certainly not trying to point to SSYS or yeah, I'm not trying to point to one specifically, but
I think what I think management track record is really important in this conversation, right? Like if NVIDIA dropped 75, 80, 90% tomorrow over the next 6 months, I would have, unless Jensen leaves, I would have zero issue deploying a ton of capital to NVIDIA. And I think most people think that way, so it'll never drop that, not yet, that 70, 80%. But Jensen has proven in his 25-year history that he knows what to do, right? So you take a bet on that any day, right? It's like take like
Yeah.
it's similar to taking a bet on yourself when you know what you're doing,
Right.
right? You're going to take that opportunity. The problem with these companies is this management has been piss poor for 30 fucking years, right? So um, these technologies all have fantastic potential, but they haven't achieved it in a way that's meaningful or of any substance, right? So I think I don't think we're gonna bubble out. I don't think we're in a bubble though.
Well, GB, you've also said that I don't have the levels here in front of me, but once we get to a certain point, you're pulling all your money out of the market.
I'll be lightening up at the 7740 level for sure. That's the 161 extension from the 1987 crash. I mean, sorry, the breakout from GFC,
What
right?
number is that
So it's a
again?
good play.
You're talking about
Huh?
the SPX too, or are you talking about the ES?
Yeah, SPX. That's where my chart is. So that's like 77, 41, 42, somewhere around there. That's about 161
77.
extension. It can go up and down. I'm not saying it won't,
Yeah, yeah,
but
no, I just want to have a line when we reference this, it's there.
yeah. And ultimately, I think the breakout is to the 200. So after
I,
77.41, we're going to probably
I'll just mark
experience it.
7,700. How about that?
That's fine. And I think that's where we'll experience a decent correction, like we did in 2022, potentially. and then we get the bigger move to the 10,000 mark, which is the 260 261 extension. And that's where I think where we all kind of,
That's only 15.5% from here.
yeah. But the cycle is we broke out of this market in 2013, right? No, 2013, yeah. So,
Mm,
you know when
yeah.
we took off? The day Trump was elected, ironically, right? Like literally, if you were trading during that time, that was one of the most dire moments in the markets when people went to bed and in a while, right? It was down, it was down many percent, and people
Yeah.
were shocked that he won, right? And then you woke up the next day and the market just ripped out of
Yeah.
that consolidation. So I I I don't ever base bull market starting on the bottoms, right? Like it didn't
Yeah.
start when the SPY was 66. No one should, but there are people who make that claim. Oh, the bull market started in March 2009. I was like, no, the market bottomed in 2009. The bull market didn't start until we took over the prior highs, because you had a decade plus of people who sat underwater on their SPY. I was one of them. I had it in my Roth IRA. I bought it at like 120, 125, and I sat there in 2008 and I was like, shit, everything I did is now red, right? Like, and I was
Yeah.
young. So I'm like, oh, I got time, bought more, right? It is what it is. But I you didn't get whole until 2013, and there was you had a massive double top in the indices, and you, you don't start the bull market in 2009. Maybe you caught the bottom and you have some great
Yep.
stocks from there, but there was fears of insane recession in 2011. We actually dipped into
Yep.
a recession in 2011. No one thought we were out of the woods, right? Not a single person. Even people who bought the bottom didn't think we were out of the woods.
Yeah, I do think it's interesting that what was it just since yeah, if you started investing in 2018, and this is the monthly chart on the SPX. Of course, anybody who's recent remembers what happened in April, and then they remember what happened in 2022, right? But you had COVID, which a lot of people obviously will remember. But you go back in time and you just look at like that New Year's or Christmas Eve in the December in 2018. Like that was a massively volatile time that scared a lot of people. You go back just a couple months before that. This was the taper tantrum, not the taper tantrum. This was the corporate issuances and T-bills all coming due, right? So I just look back in my when I started managing my portfolio around 2017. I look back at these moments of there's not a dip that I wish I didn't buy, basically, right? And you can argue 2022, the dip just kept on dipping, but ultimately we grind higher. And over the course of the long term, whether it's years, and yes, it took a long term time, from what we'll call the top here in '08 or '07, you're not whole now until you're in 2013. So you
You're
can
break
be a
even in
long,
2013. You're break even, right?
yeah, 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 yeah. You're back. If you were buying the top, you're back from being underwater. But anyway, I'm taking a long way of getting there. Ultimately, it resolves higher as long as the status quo is the status quo. I think what you're saying, Nick, is probably more transformational of what the next 13 to 15 years look like, as opposed to everything just keeps marching on.
I know.
What I hear
I
you saying, Nick, is we're inflate right. We've got the pump and we're inflating the bubble. Uh, we're marching up this hill for all of a sudden the bubble to pop at some point. That's what I hear from you.
um Yes and no. I mean, I guess you'd have to ask me again, maybe 10, 15 years from now, if I ultimately think, uh, you know, up and to the right is there still like the market as we know it? Like so long as there is a market, yeah, I think up and to the right. I'm just saying I think that when we do see kind of a bubble blow off similar to like 99, 2000, I think the pulling is just going to be a little bit harder than what we've seen over the course of like the last probably, well, essentially the last 20 years. And if you just like looking at the chart, I think it'll look a lot similar to like 2008 or 2000 to 2002, where like, you know, let's just say the E-minis S&P marches up to like,
Well, here's the
like
lost decade that we've talked about a lot, right? If you say it's
yeah,
more like 2000 to 2002, I mean that's 10 years.
yeah. So I think, but either way, like the rallies are tradable.
Yeah,
Like the
of course,
tradable, the
of
rallies
course.
within that lost decade, I think will be tradable. But I do think that we'll probably end up in a period of time where we do see kind of like a longer term kind of range like that. But I mean, it's just all
What
theory at this point. Like it's just all theory.
Here's a question for you too, right? What if what if the analog was tariffs equal Black Friday?
Tariffs equal. Can you elaborate?
So look at the quarterly candles in 1987 and look at the quarterly candles from,
You mean
right? Like,
Liberation Day was Black Friday, essentially.
yes, yes, right? Like
I can be down with that. Yeah, I can be down with that.
we were down 11% after being down, or 10% in the Qs or whatever it was, after being down 15%. And we have circuit breakers. We have a lot of stuff that prevents us to ever have 22% moves right down. But it was worse than COVID, dude. Like the tariff stuff was actually worse than COVID. And we didn't have a global pandemic for the first time in 100 years. So what if the spark was 1987 is your analog to what happened during the tariffs piece,
Oh
right?
shit. I
Well,
mean,
I
And
fucking hate
then like
analogs, but I'm
so
done.
yeah.
because
So
we're in the S curve, we're not going to get the 13-year bull market that it kicked off, right? I don't think so personally. We're in the S part of the technology curve. So, but what if that's the analog that we're looking at here, right? And so it was just a question that I thought I'd pose out there because you look at a lot of participation in the markets right now. It like yes, we need a correction or cooling off and all this stuff. I'm not arguing any of that stuff. What I'm saying is the charts that are setting up, right, of the companies that actually produce solid earnings, who have potential insane growth. We've talked about Tesla a lot, but obviously that's one of them, right? Has done nothing for 4 or 5 years. Apple done nothing, right? And I love when people discount Apple. It's hilarious, right? Like they may not be innovational, but they are operational, right? Like they
Yes.
they crush it on every metric. You can make fun of their incremental folding screens and you can whatever you want to do, but let me remind you that the reason you have AirPods in your ear and don't look like a dumbass walking around talking to yourself is because of Apple, right? Just they set trends, they do things, and I know you guys agree that Apple is a behemoth
Yeah.
and they do, but they changed the earbud industry, they changed the watch industry. um I didn't ever wear a watch. 39, 40 years of never wearing a watch. I hated it, and now I can't leave home without my Apple Watch because I track so much stuff on it. It's informational. Anyway, I'll get off my
yeah.
my secondary
I
soapboxes.
removed mine. I haven't worn mine in almost a year now.
If you pull up a chart, so you're on the SPX,
Yep.
Yeah.
you're on a quarterly, so just like zoom out. Um, you could throw a range from basically the 20s all the way into the 50s. You've got a range from the like 1963 to like early 80s. And then you've got another range from like August of 97 all the way through basically December of 2013. Um, if you kind of measure the legs out from kind of high to low, um, that would put a measured move on the SPX at about 14,000 to 15,000. So that's
That
kind of
would
the
make a
room that we have to run to go. That's how much room we have to run if we were going to continue to kind of uh move in the fashion that we have historically.
Nick, you're
Yeah.
buying into my 1987 theory. I love it.
Yeah, I am 100%. Like totally. When like I was like, holy shit, that yeah, yeah, absolutely. I
Like
I I
when we
never I guess I never even thought about it.
when we were in April, right? I know we were talking about buying the bottom. We were
Yeah.
probably the only ones who were pretty freaking adamant on how that was the bottom, a 50% retrace, a tag of prior all-time highs. There's a lot of people on FinTwit that will say it, but we were actually talking on a podcast live while it was happening. But that like these 50% flushes, these liquidity grabs are huge, right? Like they're huge for the markets.
Yeah.
It unlocks a lot of potential. Um, but yeah, I love the when we were in April, I don't think anyone wanted to buy. It was the same exact response as COVID.
Well, I didn't, but I had to, right?
Yeah.
Like, I mean, we were on the pod, and I was like, we're too oversold. I have to buy something that I have a long-term conviction in, and if I need to buy it down, I'll buy it down. But I have to start buying some shit here on this flush.
Yeah,
I was
dude,
I
we
was the
had
most vocal about this is going to happen, and it did.
absolutely.
But I was the last to start buying of the three of us.
Yeah, it was it's insane, absolutely. I just think I I wish we can get a correction that's quick and not too brutal, right? Like these corrections these days are pretty brutal. But
Yes. Well, to most people, are scary, right?
yeah,
Because you can
one
be
foot out the
up
door.
whatever you're up, and then you wake up the next morning, and all of a sudden things are down 3%, right? 5%. And then the following day, it's even bigger, right? And that,
Yeah.
to people who haven't managed money or just started managing their money, like that's scary, right? That's real dollars out the door. It's not like it's not real dollars out the door unless you're, selling, but at the same time, like you had this exuberance feeling of my portfolio is up whatever, whatever, I'm bulletproof, and then all of a sudden you're leaking blood everywhere.
And that's exactly what I think is going to happen here, right? People are up insane amounts of percentage this year because they're kicking it as soon as they see the first moment where the dip doesn't stop dipping, they're going to be out, right? They're going to try to protect those gains. So you get a quick move down, which hopefully becomes viable. But the other part, so I was talking to my cousin yesterday, and he was asking me how the mechanics of a liquidity grab work. And I was very curious because when I tried to explain it, I found myself kind of fumbling a little bit, right? And these high volume move down and then they just stop, right? And then they go up. It's the best way I could describe it to him is we're just out of sellers, right? That's it. And now there's only buyers. And so you have the move out. It's like why does it happen? I was like, it can happen for a number of reasons, right? It could be like a new IPO where the investors are got their 10x and they're trying to get out, which is what I think. Like RBRK is a good reason example. They had a solid earnings and it got absolutely smashed, right? And it lasted 3 days and that was it. And now it's back up to like 82, 83, right? So if you were an investor, you're scared as hell in that moment. And so I'm curious on what you guys think the mechanics of a liquidity grab feel like. Maybe you can do like, I don't know, a couple sentences to make it concise.
Um, I don't. Speaking from like a technical perspective or from a technical point of view, it's just flushing price into an area where there's a lot of demand. So you know, Rocket or I'm sorry, Rubric, for instance, um, they flushed it right into the 200 day.
Yeah.
And I actually just posted a chart on StockTwits. I had kind of that descending channel drawn. I had that drawn before as price started to break out, before they smoked it pre-earnings, but I don't think I'm the best at kind of nitpicking a low. I take the Trader Florida approach where I like to play the first ABC leg off the lows. So if you're looking at RBRK, for instance, on the daily, your entry was really about 78.50 to like 79, but then you're getting the confirmation through 79.80. Like between 79 and 80 is a reclaim of the most recent pivot low. Um, Although there's a
But it's the
guy on,
mechanics, Nick.
yeah, so
I'm more
there's
curious
a,
on like the amount of volume that day produced, even though it's right into the 200 day. Like he's like, who's selling that? And if it's a liquidity grab for hire, then aren't those people all just selling out? And I was like, no, I think they have larger positions and they use a small amount of that position to beat down the price and get retail to sell. But
yeah,
like, what's
so
the point of having
Matt
retail selling?
Matt Caruso had a phenomenal video on how institutional money flow creates the build out of the larger time frame patterns, both like largely talking about kind of bases and ranges. So I'll see if I can find the video, but he was talking about the misconception or the misconception that um I'm always interested whenever we talk about accumulation versus distribution. Because a lot of the time, we're looking at like the color of the volume bars. But in terms of a liquidity grab, we can't really argue or definitively say that that massive red sell-off bar is distribution. If anything, as of right now, we would probably actually say that it's accumulation. They had to sell price and push price down so that they could eat it back up. Or they had plenty of I mean, again, to kind of like to answer the question, like that's how liquidity is created is by like flushing price so hard that you're causing forced selling. I
Yep.
I
And
when it
then
comes to
you
like the
you
idea
sell
of
it.
like when
Sorry,
it
go
comes to
ahead.
the idea of like retail, I always like ask myself like when you hear the word retail, like does retail really have enough money out there like in play
Collectively,
to
we do,
really
right?
create this kind of situation? Like I don't
They
know.
don't
I wouldn't think
they
so.
don't create the situation, Nick. What it's created by the institutionals, right? But now, if you've been holding RBRK and you for like 4 months, you are now red off this earnings, and you're like, well, there's got to be something in this. If they're going to sell it down this hard, it could be something I'm missing. And so you think about taking it off, and then you
Sure.
don't participate again, and then you start to see. So the liquidity part, the liquidity grab to me is for them to get the price to get you to sell. What is that level? We don't know. They'll keep testing it and then turn it back up. And so when it starts to break out, you're like, screw this, I'm getting back in. And that chase is your liquidity grab because that chase is where they start selling into.
I guess I didn't think of it that way. I thought of it as the other way around, where if you're a fund manager, you're not typically buying, like to get to your point, like institutional money managers are not chasing price typically. They're the ones putting in the floor. So like they're napkin technicians for the most part, where they say like, okay, every time price comes down into the low 80s, buy a huge fucking block, buy another huge block. Price will kind of like, they'll put in these huge block orders. Price will kind of like bounce up a little bit, and then they'll let kind of price settle down. Price comes back down to the low 80s. They'll load, more up. So I guess I was kind of thinking it more in terms of how they kind of create the floor. And if you're trying to put um, money to work and like a massive amount of money, I don't know. Like I just they're not going to be chasing it through 98. Like they start like if I was managing a whole bunch of money and they just came out with a fucking awesome this or that, I'd be like, how can I fuck with people to get them to sell so I can get my price lower? I can get better positioned. And so if you're a
Yeah.
believer in RBRK, you know, that low end of that, dude, like if you look at the floor right there at 82, 83, man, like every quote unquote retail or short-term trader had stops probably at like 81.50, maybe under 80 if they were I don't know, really being I mean if they were a little loose with their stop, just being that, you had that pivot low, but um I don't know, that's just kind of how I was thinking about it, not so much the other way, but I'm gonna have to ruminate on that a little bit.
I think yeah, I agree with you both in a way. I think that many times horizontal lines mean a lot more than
Yeah.
the trend line. And we can see that, right? Like we pull up the volume profile on occasion, but if you just look at the candlesticks, right? If you look at the bodies and the wicks, you can see where the volume shelf is. You don't have to, pull that up to even look at it. So I think that a lot of times for me, the hard part is when you don't get that base, like you've got right here, like we're looking at rubric, right? Like, yeah, it's either going to break out or it's going to break down, and it breaks down to a technical level to bounce back up. So now you're facing resistance. I think the hard part is, and this has always been, selling is the hardest part, and buying in an uptrend is the hardest part, right? Because you always want a little bit cheaper price, and it's hard to get it when the stock does nothing but go up. I mean, I've had my eye on NVDA forever, and I've been in and out of NVIDIA, but most recently, I put entries underneath since May everywhere I thought NVIDIA would be. So this morning I was just like, fuck it, 180 is my price. I'm just gonna buy my first trench here. And if I have to buy lower, I'll buy lower. If I have to buy higher, I'll buy higher. But this is my sort of, flag in the ground. As
I
far as
shorted NVIDIA yesterday.
Good. As far as liquidity sweeps go, I think it's pretty easy to see, right? Like what Nick is saying, there becomes a level that stops can be seen, right? Like you can see when there's a lot of orders on the books for stops, and I think stops get run a lot, and it's pretty easy to see. We're not going to stop just at the stop. We're going to go below the stop,
I
It's
mean,
and
it's only
it's easy to
short
see for
term.
us, right? Let's clarify that. It's easy to see for us who are paying attention to these things.
sure,
But if I go back and think about when I first started in 2008,
didn't know any better.
2009, I was like,
Yeah,
oh, why? Like, oh, I sold out there. Why did it go? Right?
yeah,
Until I sat down with someone who started explaining to me how this stuff works. it was that moment of like, I keep getting stopped out and then it rips the other way.
I forgot which book it was I read. I'll have to look it up. But basically, and I'm paraphrasing here, your stop should really be where you're buying, right? Your stop should
Yep.
really be your buy spot as opposed to your cut spot. Now, where you are, if you've taken a massive profit and that sort of a trailing stop, that's a little bit different, right, Nick? You're willing to get out of the stock at that price. But if you're building a position, um,
Your
usually the
mind's
stop is where you should be buying.
yeah. Your mindset there, though, in terms of trail stopping, your mindset is I'm freeing up cash to redeploy elsewhere and locking in gains on an existing position. You also have to think about like if you're getting trail stopped out, you're running the risk of price going into a dead money period, what whatever time frame that may be. So price might start to consolidate. And it's like, okay, if I get trail stopped out, great, because now I can move into a fresh setup that's going to be trending versus price moving sideways. What I think you're referring to is like, yeah, totally, because I can't tell you how many times I have, instead of like cutting a trade, I have either reduced the position to like half the size or a quarter of the size and either left my stop where it's at or just like because I reduced the size, I kind of widen the stop a little bit because I'm like, ah, fuck it. Like if I cut the position size by 3/4, I can widen the stop a little bit because it's literally meaningless size. It pretty much keeps me in the trade. And like you said, it'll like it's funny how it ends up like reversing there.
Well,
So
we started on this conversation not with the 3D printers, but what I'm doing in my portfolio, right? And I
Yep.
think one of the things that I've learned is, yeah, I like to have these names that have gone over 100% that I'm proud of, right? But at the end of the day, what does that do for me? And some of them, they can be a leverage enhancer, right? Depending on like semiconductors, AMD can be a leverage enhancer for me. I'm going to be long in cybersecurity. So what I've done, and specifically these two or three shitty stocks, SoFi not so shitty anymore, but I was buying on Rivian, Sentinel One, and SoFi. I was buying the bottom every time, right? Like I was buying where people's stop should be. And I have taken those positions and grown them exponentially while selling higher, right? And Marvell's the same case. Marvell's not quite a shit co like these others are. But I was like, why don't I just take that to the next level with my entire portfolio? It's something to use as leverage on buying these ancillary names around my core holdings. And the core, you just got to hold the core. You don't trade the core. But the torque or the leverage, however you want to call it, those can be enhancers to those. And those are the things that I need to get better on trading and just being complacent, for the lack of a better word, of just holding them and watching them run. My whole crypto thesis on leveraging up in crypto. I mean, you hate to uh, blow up your basis from going 55 to buying at 300, but hey, if it's going up, 300 is cheap, right? 300 is just
yeah.
adding more exposure to the area that's going up, and I believe in. So to bring that all full circle, that's kind of what I've been thinking about and doing, and using those tools that we talk about in a different way for me strategically.
I think it's the same idea for it's actually kind of a something I took away from my days on the prop desk. The Some of the guys that were there and had been trading forever, they had no debt. They never paid. They never financed anything. When they had a solid year, they would be pulling capital out and buying hard assets. Like a lot of them were buying like homes and vacation homes, ski resort homes, condos, like you fucking name it. Ultimately, for like it seemed to me to be, I mean, yes, they were using those hard assets for their own, like, family and whatnot, but they were also long-term investments too. So it's like, I think sometimes, like, especially when we're talking about like retail guys, start looking at, I think it's a lot of us that are more active traders kind of want to get stuck in this identity of like the trader rather than a money manager and like really trying to build out your wealth. So, and it's the
Yep.
same idea, exactly what you're doing, where like you're using the shorter term positions or these Momo trades to help build up these other bigger positions. It's the total same idea, just different assets.
Yeah, I mean it's just leverage and torque, right? Whatever's
Yeah.
whatever's running, that's what I'm going to use to, you know, help me fund everything else that I want to do. And what do I believe in the most? That's where the money's going to go to ultimately, right?
I
Anyway,
want to buy a
enough about
laundromat.
that.
I want to buy a car wash and a farm. Those are the three other businesses that are on my fucking list.
What's on your bucket list, GP?
Me, a castle in Italy.
Yeah.
You can probably afford one now. You can get a villa for quite a reasonable rate.
Must have tunnels. I must have tunnels.
Must have tunnels.
It's required. If I'm gonna buy something stupid, I might as well have everything I want.
Um,
No, dude, like I think for me, all this stuff is always just taking care of um the world around me. I think that's what's important for me. Uh, I live in a house. I own it. I'll own. Will be paid off in another 10 years. Um, it's just making sure the loved ones I have get taken care of, the ones that I don't love also, right? Like this, we've been doing this. If this is not a better indication, we've been doing this podcast and this conversation for 3 years. We've been sharing on stock twits for well over a decade. It's all about trying to push the world forward, and try to make it stuff better. So I don't, the only thing I would probably get like extravagantly is an old Mustang.
Don't lie.
I thought
You'd
you
buy a
wanted a
drone.
Japanese sports car. That's what you had me
No,
looking
dude, my
out
first
for.
car was a Ford Mustang. I'm an American
All
muscle guy.
right, all
All
right.
right.
Well, you told me like look for a fucking Nissan or some shit the other day.
I
No,
want
my
my own
first, yeah.
drone.
So I like, there's two things I would buy. I would buy my wife a Carmen Ghia, which is the Porsche VW collaboration,
Yeah,
and I would buy myself a Ford Mustang. That would total around
an old
40 to
school one. Or do you want the electric joint?
No, the old, like I'm talking
Oh,
about a fastback, not the Shelby
Yeah, what's
either.
the Gone in 60 Seconds one? What's it called
That's
again?
the Shelby. I'm talking
Yeah,
about a
yeah,
fastback.
yeah. What did he call her? What did he call the car?
Gloria was a G, right? Gloria?
I think so. I don't remember. I only watched the first couple of those movies. I know the franchise went on forever. Nick, I'm all with you on buying a farm.
Eleanor, bro. He got it. Alex got it. Eleanor.
I'm
Eleanor was
all
the
with
Eleanor.
you
Mustang.
on buying a farm. I'm actually looking at a big acreage place
Yeah,
that we're planning. We're starting to look at how we accomplish that, and you'll see less of me in the springtime because I'm gonna be farming bags.
yeah. 10 of the goats, all the
Jody,
stuff.
my wife, she loves goats, so goats will be. GP shaking his head. Hell no.
You fucking people. So I want a bigger backyard than I have right now, but to really just build my own gym, right? Like instead of this right here, I want to build a gym with a sauna, um, and like a little like push track and stuff like that. But I could care less about farming.
So, well, one thing, and I know we got to wrap up, but in 2021, when crypto made its run up, I know the guy gets a lot of shit, but Jim Cramer, said that he sold his Ethereum and bought a farm with the proceeds. And I was like, how fucking genius is that, right? Like, you obviously he's still doing a lot of work, and this is kind of work for me. But yeah, I think we want a farm, and it's not just me speaking that I want a farm. I think as a family we want to have a big place for us to spread out and do what the hell we want to do on the land. So that's kind of where we're focused right now. So I'm excited
I
about it.
think
I
it's
thought that
really
was a genius
cool.
idea. And when these crypto bags I'm holding go wild, then hey, I'll turn into Jim Cramer in 2025 and buy a farm maybe. I don't know. We'll see.
I think it's cool, right? Like
Yes.
not necessarily the farm, but that both of you have a very defined vision of what you want from this life. And whatever that may be, it's just like it's great to see there's a plan, right? There's a plan for all of us that it's a farm or a car or whatever it is. It doesn't matter, but you have this is a brutal game, right? So taking the assets out, taking cash out and putting it into assets that you want to be a part of long term
Yep.
makes total sense.
When the farm comes to fruition, the three of us will have a tractor race and we'll stream it live for everybody to see.
I want to dig, man. I want to dig.
Well, knowing my boys, we'll have to have some type of digger, an excavator, or a backhoe or something. So
You
that
ever
that's
watch those
that's
skid
probably like
races?
what's that, Nick?
You ever watch those skid races?
The skid
Dude,
steer races? Yeah, man.
yeah.
Yeah.
Oh man, yes.
So we'll race
There,
tractors one day.
so there, when my first job out of college, I joined this company, and the entire crew that was working there, they were big about mudding. And so they all had Jeep Wranglers before Jeep Wranglers were cool and fancy now, but like lift kits and stuff. They used to all just and they go mudding almost every weekend. It was I just love when people have passion about things, dude. It is really cool when you whatever it is, uh, unless you're being a piece of shit. But
Yeah, for sure.
yeah, right? Like whatever it is, as long as you're doing you're following it, dude. To each their own. We only got one life.
By the time I reach the age that I'm able to take out of my Roth account, I just want to live off the dividends. Like I don't want to have to fucking worry about trading. I don't want to have to worry about anything. Just like give me my monthly dividend payment and peace the fuck out. I've got to ride this tractor today.
Dude, we're gonna have to do a 25th anniversary show though.
Yeah.
Yeah, for sure.
We can still do this. This isn't work. I mean, it's work, but it's not work. And Randy says he doesn't want a farm. It's too much work. And I said, Randy, I want a farm, not a farm. There's a big difference. You can still have a lot of acreage and not be a full-on farm, but you can be a farm. Anyway, hey guys, I love
Yeah.
you. It was good to see
Yeah.
you today. Y'all don't forget, go vote for Trader Ty. He's in the chat here, but go vote for him. We'd love to see him at Stocktoberfest in Coronado, October 20th to the 22nd. We're going, all three of us are going to be there. We're wildly excited about it. I know a few other people who said that they're going to come, but I know it's an expensive ticket, and you can use any one of our three promo codes to get 20% off. 20% off is better than no percent off. So I hope you guys use it if that's something you want to do. But vote to get Trader Ty there. Ty has been putting in great shit for a long time, and I love seeing his post. I love seeing your guys' posts too.
Yeah.
Um, but other than that, we'll see you tomorrow on the big show over on Stock Twits, where we'll be on the Community Rip Live 2 p.m. every Wednesday. Any final thoughts, gentlemen? Or are we good? We closing it down?
Buy 3D printers.
Oh,
I
makes me
don't even
laugh.
know where to go with that anymore. Nick, anything?
Yeah. Catch us tomorrow.
Catch us
We'll see
tomorrow.
you.
Peace out.